Welcome to the Learn and Grow series. Once again, I'm your host, Loomba. We meet bi-weekly to explore the wonderful world of real estate investments and share knowledge on different aspects of real estate investing. Just like to share one more time again that I'm still raising for my current industrial deal is still open. If anybody's interested, please feel free to reach out after the call or anytime. And today we have a very, very interesting topic on tokenization. And we are joined by our good friend, Mark Feidelman. He's the CEO of Smart Blocks, who brings over 14 years of experience in blockchain and e-commerce to the world of fractionalization and asset investments. A licensed real estate broker with a knack of strategic marketing, Mark has led Smart Blocks to be a trailblazer in real estate tokenization, revolutionizing investment flexibility and control. His expertise in analytics and data-driven strategies has played a pivotal role in generating over $1 billion in revenue for e-commerce leaders. At Smart Blocks, Mark is redefining real estate investments, driving innovations in USA and UAE, not just USA, outside of USA too. So welcome, Mark. I'm super excited to have you with us today.
Well, I appreciate you inviting me. Can't wait to get into real estate tokenization with this esteemed list of people that are with us.
That's awesome. And I just like to remind everybody that our topic for today is beyond Bitcoin. Trust me, there is something beyond Bitcoin too, and that's the tokenization. So today we're going to be talking about real estate tokenization boom. And we all know that tokenization is reshaping the landscape of investment and asset management, especially in today's rapidly growing IT sector. By converting rights to an asset into a digital token on a blockchain, tokenization offers a novel and highly efficient way to buy, sell, and trade assets in a secure and decentralized manner. This innovative approach not only simplifies transactions, but also enhances liquidity and accessibility, opening up new opportunities for investors and asset owners alike. As IT continues to evolve at an extraordinary pace, the integration of blockchain technology and tokenization is setting the stage for a transformative shift in how we perceive and interact with tangible and intangible assets, promising to redefine the future of global markets. With that being said, Mark, I'm going to ask you, can you explain the concept of real estate tokenization and how it differs from traditional real estate investment models?
Yes. Well, we all know how traditional real estate deals work. You've got a GP, you've got a bunch of LPs. Actually, you probably don't want too many LPs because that becomes very painful to manage. You also aren't usually exposed to a global audience of investors, and you certainly, let's say it's a $20 million property, you certainly don't want to deal with somebody giving you $50 for it. I mean, the hassle and cost and expense of doing that is, it would never be worth it in any world. So when you talk about real estate tokenization, all that is, and people get into crypto, people get into all these other things. It's not a crypto type thing. It is a blockchain type thing. And all that means is that the shares that you would have got from a traditional deal are now digitized, and those digitized shares are called tokens. Now, why would you want to do that? Well, once it is digitized, it could be sold or purchased anywhere in the world, just like that. Outside the United States, if your property is over $5 million, you don't need accreditation. You still need KYC, you still need AML, that's anti-money laundering, but you don't need accreditation. That means I can raise $1 million from 1 million people in Bangladesh for $1. Now, nobody would do that, but you get my point. You could if you wanted to. And the management of it is simple because it's all done on what I consider to be a tokenization or shareholder CRM. And the CRM does most of the work in updating them and paying out dividends. And if you sell the property, paying them off. So tokenization, because it's a digitized share now, allows you to trade it. You still have to follow US law. In some cases, it's a year before they could sell the token to another US investor. But if it's outside the US, it's fair game. How you do that is you follow the same rules and legal rules as currently you're doing with traditional real estate investing, which is usually a Reg D Some of you might be doing Reg J's, more power to you. But we typically see Reg Ds and Reg CFs. So you follow those rules, but you also file what's called a Reg S, which allows you to raise money from anywhere in the world. And the Reg S has different rules than the Reg D and the Reg CF. So it opens up a lot of possibilities. It opens up, you to 95% of the global population, but as long as they have an internet connection.
So you said you manage the share in a CRM. Is there something you're referring to like cap table? Is like comparable to that?
It does all of that for you. It's just think of it as a CRM for real estate developers and real estate owners. It's not truly a CRM system, but as long as they're a token holder, and that extends to if they sell the token, you still know who they sold it to, and now they're part of your ecosystem. So it manages all that for you. So because you wouldn't want to do it manually like you're doing it now, you want to have some system that's managing who owns the token and where do they live and have they been, are they compliant? Because you don't want to deal with that.
How would you do it? There's like some blockchain involved. Do you create a private chain that kind of work into or merge into the public chain? How does that work? If you can shed some light on that.
Yeah, we've got about 20 blockchains we support, but most people do it on Ethereum or Polygon because of the smart contracts and because what's called there's a certain type of token called an ERC 1400. And we do, the whole crypto industry has done this to themselves. But the Ethereum ERC 1400, it's still an Ethereum token, still can be traded anywhere, does these checks to make sure that you're accredited, that you have, you pass AML, that in the United States, that you meet all the requirements of being an investor in the United States. So it's done on the blockchain. We do it in literally under 2 minutes. As long as your paperwork, as long as we've gone through the due diligence process with you, as long as we've checked your financials, you could list your platform or list your property on our platform. We tokenize it in 2 minutes, and those tokens are available to be sold instantly, and we help you sell those tokens. Now, I want to add something else to this. Once you have a digital token, which again is just a digital share of your real estate project, you could sell it. You can also borrow against it. So a lot of you in office having trouble borrowing money, you take these digital tokens from that represent real property interest in your property, and you collateralize them, or you use them as collateral in these decentralized finance markets. Again, I know I'm talking all these terms, but all that means is there's millions of people around the world that want to lend you money at an auction style type of rate in order for you to take that money and use it to complete your project, or just take money out of the project, or in the case of office, you might need to change it into something completely different. And that's the power of tokenization of real estate. Now, we're in the early days, so this is more, it's harder to do today than it will be a year from now, but it's being done every single day. And eventually I'll talk about where this is headed and why you guys are going to get really excited about it, because where it's heading is going to change everything.
Interesting. So can you share with us one case study or your business model that I will be interested to find out what your business model is, what it looks like, and you have the sharing session as well. Feel free to share your deck or whatever you have.
Yeah.
So walk us through, and then we can ask you more questions as we move along.
I like this, interactive. Okay, I'm going to share my screen. I think I'm allowed to. All right, everyone see my screen?
Yes.
Okay, so this is one of the more famous ones, and it's famous because it started in 2019. That's the Aspen Resort in St. Regis Aspen Resort in Colorado. So they had already completed their hotel, but they needed money for renovations and to update it. So they did an $18 million security token offering. All a security token is a tokenized asset, like real estate. So they were calling it security tokens back then. We call it tokenization now. Same thing, same exact thing. So they tokenized it. They said, if you buy this, you own a piece of the resort. And they took the money, they made renovations, they increased the value of the property as well as services. and the token did this. And security tokens are not like crypto. It's not like got a huge liquid market. There's no meme coins in security tokens. These are real serious investment instruments like shares of stock on the stock exchange. It's exactly, works the same way, but tokenization, you can do so much more when we get into talking about smart contracts and the ability to be able to do this internationally in a flash. But the value of this went from 18 million to 65 million. So they were so happy about this, they're issuing another one very soon to do something similar. I think they're expanding the hotel. But it's important to know that this was a hotel, so they were taking hotel revenue in giving out dividends. I think the cash on cash wasn't that great. It was like 7.5%. But the value of the property grew so much that the token's now valued at 65 million overall. So that's one of the more famous ones because it's been around the longest. And believe me, back then, it was not easy to do that. Today, it's pretty easy to do it. But back then, so they were one of the big ones that did it early on. Does that answer your question, Vinky?
Yes, you did. I was waiting. I thought you were gonna share us something else too. I was waiting on that.
No. I mean that was the big case study I think that you were asking about. But I have a ton to share. So,
yeah. So how did that go? So you guys done with that raise, or what it looks like?
We did not do that raise. We helped raise the money, but another company did it. A company called Securitize. And they tokenize anything and everything. We're very focused on real estate. Our platform is just coming out. They've had a quasi exchange. It wasn't even a platform that helped do this. They're the same ones. If your audience has been paying attention to the news, and I would blame you if you hadn't, but BlackRock just gave them $100 million to invest in tokenized assets. So the big boys are getting in a big way. JP Morgan's been in, HSBC's been in, they've been tokenizing bonds, they've been tokenizing money market accounts. There was another announcement that they're going to start, the Asian banks are going to start tokenizing their deposits. So we're going to see over $1 trillion tokenized in the next couple of years. And real estate is right around the corner. Thank God they're not getting into real estate because then I'd have incredibly wealthy competitors, but they're going to get there. And so we're going to have a huge head start on that.
So people in your space, what kind of business model they have, or what is your business model? Because you guys are not the operators and you are not on the capital markets either, right? Or somewhat in capital markets, but you are trying to tokenize it, right? You kind of sit in the middle. Help me understand that.
Yeah, of
so
course.
you are creating the blockchain, you are creating the dApps, whatever is needed to move along on this path to fractionize or tokenize the assets. And then you're issuing those tokens on your platform to people, right? So people can come, they can buy, they can exchange. If you can, take us through that journey.
No, wonderful. So I liken it to the Coinbase of real estate. So not only can we issue tokens, we can trade them. We're not fully at the Coinbase healthy liquid markets yet, that we're about a year away from that. You can also borrow and lend against them. Not on our platform yet. We're about a year from that, but we're facilitating all of these things. So right now, today, think of it as Airbnb, but instead of renting a property anywhere in the world, you can buy a piece of a property anywhere in the world or in the United States for less than $50 if you want. Our average investor, we believe, will be about $2,000 to $2,500. When the institutions start coming in, then the sky's the limit. Like we're going to have an AB5 program, if any of you are familiar with that, where if an investor wants U.S. citizenship, they can buy a piece of a property for $800,000, and they're lined up out the door, folks. Believe me, to do this. So if your property's AB5 compliant, and we help you get that compliance, you have a ton of people wanting to invest in that real estate right away. But there's going to be a lot of those types of programs that are going to be rolled out here soon.
So can you do like kind of hybrid approach? You can do the fiat currency like we do in today's date, and then take 50% of it and tokenize that. And then people always also might have an option, not always, might have an option when they try to sell their tokens, either they could be digital or they could go back to the fiat. Do you have that kind of setup as well?
Yeah, I mean, I think you might have been reading from my notes. Yes, exactly. So you could either invest with crypto or you can invest with fiat, which is just dollars, euros, any currency around any currency that Stripe accepts. So that is how programs like AB5 work. You know, people in India and China, they can't get money out of the country, but they can with crypto. And so they get into what's called USDT, which is just a stable coin that mirrors exactly the US dollar. So it's very
Mhm.
stable. So it's not going to fluctuate. So they could use that to buy property in the United States. So that's how they get around that. And then anywhere, any country that accepts Stripe, which is a lot of them, you can invest directly with a bank transfer or a credit card or a debit card into the real estate.
Actually, that's funny. You said I read your note, which I didn't. I'm sorry, I didn't get to get through your notes or your website. I did a real estate project in my Berkeley days
Mhm.
on blockchain, and that happened to be the real estate. So I might have a little bit insight into it. Like that's how I put my glued my project together. Different
Right.
dots. I try to connect that what we can do the best. And the other thing I wanted to ask you about the liquidity. How is the liquidity works in the blockchain space or in the tokenization space? Because from my experience, I know after 365 days, basically you can liquidate. And like we're talking earlier, you could go digital or you could go back to fiat, or you can even invest in Bitcoin, maybe.
Yeah. And again, it comes down to which offering it's under. Reg D, you're right, 365 days, but not if you're an international investor. And somebody asked about can you raise money internationally with the Reg D? Yes, but you need to have an addendum Reg S, and then yes, you can invest. International investors can invest. There are no restrictions. They can sell it the next day. They could trade it just like you can any stock. Internationally, in the US, there are some limitations. Reg CF is a little easier. I think it's 90 days. I'm not an attorney, so
Mhm.
remember that when I say all of this, double check all of it, but I'm pretty confident that I've gone through it enough times to know. But so yes, I mean, international has different rules than domestic. You have to, the smart contract will know if your investor is domestic or international, and it'll apply the right rules depending on their venue.
So let's talk about the smart contracts too. Smart contracts are something like that. It's not complete replacement of the PPMs or the OA or the subscription agreement that we do in today's date. It's kind of addition to that, correct me if I'm saying it wrong, right? So with the smart contracts, when you're working at the international level, are you putting some kind of language or using their local rules and regulations that come into play when you're doing the smart contracts? So if you can share that with us.
Yep. So you program in the rules, or we do. And if it is country specific, we can certainly do that. But at this point, it's mainly the US rules because we're one of the most strict.
Mhm.
And our rules are really translate globally pretty well. It's not always the case, but yeah, we'll look at local rules, we'll program them in, and it will force the anytime any kind of transfer event happens, it'll force those rules to happen. So you can't just sell to anybody. You have to sell to somebody who's been KYC AML'd internationally. Any other than that, there are no rules. I mean, I'm exaggerating, but those are the two primary ones. There
Mhm.
probably are some little rules that I've never heard of, but all that's programmed into the smart contract that exists on a single every token. Do you want me to kind of cover smart contracts and why they're important, or does most people know?
Yeah, it is. Yes,
Okay.
please do. And share
So,
with us too if you have some visuals as well.
no, but I think I figured this out how to explain it so that even I understand it because I was confused for a while. But all a
Mhm.
smart contract is, it's built into a digital token, and it's a set of rules like macros in an Excel spreadsheet. Everyone knows Excel spreadsheet. Um, a lot of them use macros, which are just mini programs. That's all a smart contract is, but it's not on an Excel spreadsheet. It's built into every token that you issue for your property. And in the future, it'll include title information, so you don't need title insurance. It'll automatically route things to the government that the government needs to see in a transaction. The future of this is you'd be crazy to do it, buy or sell any property in a traditional fashion because the amount of time and money you're going to save by having all of this in a digital contract on your token, every token, it's like a Carfax for your property. That will allow these things to happen quicker and way less expensive because all the due diligence will be on that token.
So when you're trading that token, let me ask you this follow-up question too. When you're trading the, let's say, I wanted to sell it to Ruben, maybe,
Yeah.
my token. At that point, what would it look like, and how it's going to change the cap table or the CRM at this
Yep.
side, and how it will know automatically that this token belongs to somebody else now, and that person should be getting paid going forward?
Yep. So that's the beauty of blockchain because it's very transparent. You can look up anything and everything. It's not necessarily tied to your digital identity. The developer has permission to see the digital identity. The real estate owner does. So how it works is you sell it to him. It's not really to him, it's to his wallet. It will do a check. The tokens will do a check automatically to get a dossier. And this all happens like at lightning speed. A dossier of everything. Is he KYC, AML? Where does he live? Are there any other restrictions? And as long as it meets all those checks, you will sell it to him in 2 seconds. And it'll transfer the money back to you. It's all done automatically. Then the smart contract updates the cap table automatically with the real estate owner or developer, and it's swapped out. Now, the GP or the real estate owner could say, look, we want first right of refusal. Maybe we don't want any of these tokens going to Russia. I'm just saying, even though an AML's been done, maybe they want to stop that from happening. Maybe it's a government type of thing. And so it'll stop it in its tracks once it finds out that this person who's gone through a very extensive background check, not background check, but more of an AML check, lives in Russia. So the GP says, nope, I'm going to deny this. Now, you can't do that with crypto. Moreover, if somebody hacks your account or your wallet, this is better than fiat. The developer or owner of the token pool you can go to them, Vinky, and say, hey, my account was hacked. And the developer can cancel that transaction, take the tokens from that wallet, eliminate them, and give them all back to you in an instant. It's very, very safe, probably safer than deposits in a bank because of that. Now, the developer and real estate owner they have a lot of power. Obviously, if they were to do that without your authorization, there would be a huge problem there. So we've built in some safeguards to that, like some escrow type services. But to make a long story short, that's how everything works.
Yeah, I was going to ask you the next question was on security anyways, because I was just thinking about that. We heard a lot of stories on the Bitcoin side, how people stole the digital wallets and all that. So since it's a real estate, it's a kind of asset backed up. So how the security is going to work? Basically, you can destroy that particular record and kind of recreate it, or how does that work?
Yeah, well, there's two issues that they have, right? Think of it as paper shares. Even if I stole your paper shares out of your home, you would go to the developer and say, hey, they stole the paper shares, cancel those and reissue them. It's the same exact thing with security tokens. And plus, if they tried to cash in, even if, let's say somebody died and they hacked their wallet, they got the shares, because they're not on the whitelist of the real estate developer, our platform will not issue them their dividends and will not issue them their proceeds from any sales because their wallet hasn't been whitelisted. It would still go to the person who's dead and not the person that was hacked. So literally one of the safest ways to transact and to hold equity or funds is through security tokens.
So Ruben has a question, but I wanted to loop in that question into my next question is like, can you share with us what your portal looks like? And then how can people, buy or sell at your portal? Because if I'm a syndicator, I come to your portal, I just digitize or tokenize my deal. and I say, okay, I wanted to have these bunch of tokens. I wanted to float those tokens out. How would somebody get their buyer to purchase that? Or how would somebody sell it? And those are the first two questions. And follow-up question I want to ask you is just like, what is there for you guys? Like I asked you this question before, what is your business model? How you are getting paid in this whole transaction?
Yeah, I mean, two very important questions that are near and dear to my heart. Well, to answer that, how we get paid is when a developer comes on and lists their property on our platform, we charge them for that. And I'm going to show you what this looks like. We built it off of, can everyone see my screen?
Yes.
We built it off of Airbnb, kind of the Airbnb look and feel. You know, you got your filters over here, depending on where you want to invest. And if you want to check out these properties, you just click in. You can see all the photos of the place. You can see the investment amounts. You can see that you can invest through an onboard wallet, which you could fund anywhere, debit card, instant bank transfer, offline bank transfer. We'll take checks, Bitcoin, and USDT, but also all the deal terms are put into here as well. So all of your due diligence, all that's uploaded to the site. So anytime somebody makes an investment, let's say they want to put $1,000 in, and this property's in Dubai, so we also do dirhams. You just make the investment. So for an investor invest in one of your properties, it's literally three clicks. It's like as easy as buying a book on Amazon. That's how we made it. Then that investment goes into their portfolio, and they can see all the properties that they own right there. So we've made it very, very easy and simple for people to invest in these properties. So just think of it as Airbnb anywhere in the world. All of these have been, of course, they've been looked at from a regulatory and from a due diligence point of view. So that's the part you don't see that we're doing offline, is doing all that for you. So these are safe investments to the, you know, easily as safe as if you were doing it traditionally. And then these developers and real estate owners that are on here tokenizing their properties, they get ranked and they get reviewed. So you can see, okay, this is a pretty safe, even though I'm investing in Dubai, which is extremely safe, probably safer than here. I can see the reputation of this developer to see how well they've performed in the past. And because it's on the blockchain, I can see how well they've performed in the past because we look at every dividend, we look at all their transactions that have happened in terms of sales of these properties, and we give you a real, hey, this is what they did last time, you know, 7% cash on cash, and they doubled the value of the property, you know. So it's,
So is there a timeline for the raise, like the certain, like, you know, 2 months, 6 weeks, 8 weeks, 10 weeks? How does that work?
well, yeah, I wish I had a straight answer for you. You're talking about the raise if you put it on the platform, right?
Right, if we put on the platform, and also if you can guide us, you know, what it will look like for us on the sponsor side as well.
Yep. I can't show, we are almost ready to launch, so they asked me not to let them show you the sponsor side because they're finishing up the UI. But on the sponsor side, you get a full view of everyone that owns tokens in all of your properties. So it's like a dashboard, and you can go in and issue new shares. You can delete shares that have been hacked. If you, I don't ever expect you guys to have to do that, but you know, if that were to happen. And then if you, so just think of it as a management CRM system. You can message them. You could say, hey, I've got another property. So you can move all of your token holders over to that new property to take a look at. You kind of own these investors globally, and you take them with you throughout your journey of tokenizing real estate. And then if you want to allow secondary market trading, you know, you click on a button that says, okay, allow these people to be able to trade their tokens. So I liken it to a CRM system. This is more of the investor side, as you could tell.
Eliev has a question. He says, how can you guarantee that investment is legitimate? What is the legalities behind the scene? And can you go to the court and claim your share in case of issues?
Just a digital representation of a share that you own anyway. So It's exactly the same process as a traditional method. You've just digitized the share. So once it's digitized, of course, you could do so much with it, including trading it and borrowing against it. So the court is just exactly the same thing. You're just saying, hey, I own these digital shares, and they're treated exactly the same way. It's a Reg D, so or a Reg S if it's outside the U.S. And it's the same court process. It wouldn't change.
So basically, the investor who invests, do they
Yeah.
still need to sign on all the documents, the PPN, like all the other legal documents?
You do,
And
but it's done with DocuSign. So it's one button. We show you everything. You can also download it within the property itself. And if you want, if everything's satisfactory, you can also message the developer or real estate owner back and forth. If everything's to your satisfaction, it's a DocuSign. You digitally sign it, and then you're done. That's it.
It's via
Okay.
smart contracts. That's how it goes. Do you have any example of the smart contracts, Mark, that you can share with us?
I mean, it's all code, and I'm not a developer.
Right.
So
I mean, what would it look like on the user end? It has
they
to be
wouldn't
more
even know.
user-friendly.
It's like a database, so everything's happening behind the scenes. So it wouldn't even know, or you would never see it. So it's invisible, but it's all happening behind the scenes.
Oh, okay. So what is the cost for us as a sponsor? Like I'm gonna go back to my question, like how do you make money? You make money from the sponsors, or do you make money on the investor side as well?
Both. We're trying not to be greedy, but we do charge the developer and the real estate owner to be on the platform. Why? Because we're bringing day one 3,500 investors to take a look at it, but that's just the beginning. That's just people on my waiting list. Eventually be 3, 4, 500,000 people that are interested in investing in these properties from around the world, and they're not restricted anywhere in the world, elsewhere in the world. In the U.S., you got to be an accredited investor, but outside the U.S., you don't need to be. And if your property is under 5 million, then you don't need to be accredited in the U.S. either. So for that reason,
this is not completely right, what you said here, and you have to be very careful with what you say.
I'm not an
Because
attorney,
it depends.
but
Because
yeah,
it depends on the country where the investor lives. So if you have
right.
investors in Canada, you have to go by the Canadian rule. If you have
They
investors in Europe, you have to go by to the European rules.
I don't have to, but yes, the investor might have to, because if the property's in the U.S., I just have to obey the U.S. law. I'm not responsible. My understanding is I can't know every single country. If they're investing in a U.S. property under a U.S. SPV, then me as the operator is not responsible for what investors come on. I have to follow a Reg D, Reg S securities laws. I'm not raising money from a source outside the United States, but I'm not an attorney, so you could tell me everyone's doing it wrong in the industry right now, and that you have some authority behind that. I would love to see it because I like to get educated, but I'm just telling you how it's working today, and I haven't seen any problems.
I'm going to go back to your comment on the accredited investors because
Yeah.
under Reg D, we have two structures, 506C and 506B. And the 506B is for the non-accredited investors or the sophisticated investors. And according to the SEC compliance or the SEC rule regulations, it is mandated that we need to have the prior relationship with the investor in order to invest. There's a separate rule for the digital space on the sophisticated investors.
Yeah, that's a Reg CF. So if it's under 5 million, you follow the crowdfunding rules.
Mm-hmm.
So then you don't need an existing relationship. And most people with Reg D are doing the 506C, by the way. So you can advertise, the prior existing relationship is through my platform. We make the introductions to the property, and so far, our correspondence with the SEC, that meets the requirement. So does that answer your question?
Yes, it does somewhat. So I'm gonna open it up. Anybody has a question, please ask, Mark. Good question, Elia.
Yeah, I know. I'd like to see the legal authorities on that because, you know, I'm being dead serious. I'm not being challenging at all. I'd like to see, you know, if European or Canadian law applies to a Reg D, Reg S offering in the United States.
You will not be able to get this opinion in the United States. You have to go to the other country and get a legal opinion over there.
Well,
Because-
so the industry has, that's what I'm saying. The industry has, and because they're investing in another country, you know, the local rules are different for them investing in another. Now, maybe if it's like China, you know, China says, hey, you can't do this. You can't move your money outside the, you know, China to invest. That's, you know, literally one of the rules. Then, yeah, but again, China can't come after me for offering this internationally, right? And they can't come after you for offering it internationally. And if a Chinese investor invests in your property, that's not your responsibility as a real estate owner to enforce China's laws, I guess is what I'm saying. It might be China's responsibility, it might be the investor there, but when I talk about risk, I talk about risk to you and risk to me.
It's never the investor. The investor has no responsibility whatsoever. I can tell you that me and my partners would raise the money from Canadian investors, and you have to follow the Canadian law and a Canadian definition of accredited investors when you raise money from Canadian.
Okay,
For
so
real estate projects in the United States.
If you're advertising there, right?
Not only, I mean, if it's
well, how would you be responsible and know that a Canadian investor was investing in your property? How would you're not soliciting them, they're coming to you with money. So how would you be responsible for that?
So yeah, with my first, I mean, if you have existing relationships, you're not, I mean.
No, I'm just talking about legal risk. And maybe this isn't the call for it, but I'd love to talk to you offline and we could bring in my attorney because I like to learn from these things. But my understanding is you're a U.S. citizen with a U.S. property using U.S. securities laws. If a Canadian invests in a U.S. stock, right? The stock market is not responsible. The company that has allowed somebody to buy their stock from Canada is not responsible for if there was any shenanigans from the Canadian.
Stock market is a little bit different because it's regulated.
Right.
Here, you're talking about non-regulated exchanges.
No, we are regulated exchange.
Different.
We are a regulated exchange.
Okay. I mean, again, maybe I might be wrong.
I might be, but the whole industry is going by these rules. So, yeah, I'd love to learn if we're doing. I don't want to do anything wrong. You know, I don't want to not be able to travel to Canada anymore. I like the country.
I think there might be some trans-border rules and regulations that will come into play, but again, it's such a new phenomena, and not everybody know about it or trying to embrace it day one. So, and then we all know, you know, how our rules and regulations are, you know, our lawmakers are laggards, they're always behind. And the way the technology is growing exponentially, laws are like way behind. And they will catch up. I'm not saying that we are like way behind, but they're not at the same level at the way technology is growing, you know.
No,
and then the whole regulations are not 100% applicable. That's what I'm trying to say.
And that's the big complaint, right? Is everyone's complaining the SEC and everyone else isn't making it clear, which is true. And I also think if there was this big thing from Canada that any Canadian crypto investor, you know, everyone here that's issuing these things on the crypto side, not even on the, you know, legal side, would be in big trouble. There'd be a lot of lawsuits, there'd be indictments, there'd be all that I think would be happening if, you know, they weren't following Canadian law. But maybe I'm missing something.
Oh, we'll know, we'll see how things
They gotta
transpire.
clear it up. The bottom line is they
Yeah.
gotta clear it up, and it's not clear at all.
Yeah, it is. So there's another question. I think Ruben wants to know if you wanted to tokenize $10 million property, and is it the based off of the value of the deal? What it's gonna look like from the tokenization perspective, because people can buy the token the way I understand, like you can buy $1,000, $10,000, $1 million, that kind of thing, right? It's not the same price across the board.
Yeah, so the setting of value is very important, but I always push back and say, how would you do it traditionally? Because it's following the same process. So if you said the property's worth 12 million and you want to tokenize 12 million, well, would you do that traditionally? Would you say the property's worth 12,000 and you're going to sell 12 million and you're going to sell 12 million worth of shares? It's the same thing. Now, the beauty of tokenization is you could say, hey, we're tokenizing 15 million because we want to take 5 million and invest it back in the property. So by the end of it, it's worth at least 15 million. You can do that route. You can also just do a debt note. You could just say, hey, we're only tokenizing 5 million of a debt note to use that 5 million to put into this $10 million property. Of course, now you're going to have debt payments, but if you can think it, you can do it because it's just a computer program.
I believe that the question was how much does it cost us as someone that is
Yeah, how
operating
much you
the
would
property.
charge to
Oh,
get on
okay.
your platform? Yeah, the cost.
So let's say the legal's done and you just need to do an addendum to allow a Reg D, Reg S to be tokenized. That is only $1,500 to be on our platform and about $300 a month for the CRM functionality of it to manage your cap table and do communications. And we're going to add a lot more functionality over time to it. So really, and that's to do the tokenization. That's to make it a public entity. Is only $1,500. Again, assuming all of the legal's been done. If it hasn't, we'll do soup to nuts legal and all that. And that depends on where you are in the legal process.
So what are the legals that you're referring to?
Well, Reg D, Reg S, there's due diligence that we need to do. There's, financial review, all that kind of stuff. So that can range anywhere from, 5 to 20,000 but you'd have to spend that on an attorney, at least that on an attorney anyway.
And then beside that, we still have to get our PPM and the offering agreement, all those in place as well, right?
That's what we would do. All of that legal
Oh, you
work.
do that. Okay,
Yeah.
that's included in the 20,000 that you're saying.
It is.
And plus the smart contracts, how are we gonna build that, all that, okay.
Yeah, that's done in 2 minutes. They're already pre-programmed. You can adjust it. You could say, hey, I've got a hotel I'm tokenizing, and anyone that owns 10 tokens, I want to give a free night to every year. You could do fun stuff like that as well. We got people tokenizing Airbnbs and making that offer. It's pretty cool.
Interesting. Wow, that's good. Any more questions for Mark? Raul, you had a comment. You wanted to unmute yourself and share?
Just to elaborate a little bit more, I'm from El Salvador, and we already have an official registry for digital assets. So when a company, doesn't matter where it comes, and they register their assets here, you follow the Salvadorian rules. It doesn't matter if the investor is from another country or if the company issuing the digital asset is from another country. If you use our registry of digital assets, you follow the Salvadorian rules. So that will be the same as Mark was saying. The local rules from the person that is buying or investing shouldn't be taken in case, but the person that is issuing.
That's my understanding, but I'm not an attorney. So, Mr. Kling might be totally right, and I got to do my due diligence on myself. But El Salvador, ironically and coincidentally, I am meeting with one of the president's brothers' representatives in Los Angeles tomorrow because I'm looking to do a secondary market exchange outside the US. The US is just too complicated and too hard and too expensive. So I am going to try and convince the president's brother, who handles a lot of it, to create regulation around secondary market exchanges and DeFi. I'm doing it in Dubai simultaneously because Dubai already has a regulatory authority. They're just a pain in the butt to deal with. They're wonderful. They're embracing this, but their paperwork requirements are take a lot of time. Whereas in El Salvador, they have this kind of fast track process because many of you don't know, or many of you should know, that they adopted Bitcoin as the first in the world to adopt Bitcoin as their country's reserve and standard. And you know what Bitcoin's done in the past year or two. Since they've done that. They're doing extremely well down there. So like, hey, we're going all in on this. So what's next? Tokenization, which is what we do. So I am actually meeting, Raul, hopefully with the president's brother, if this meeting tomorrow goes well, on that very issue.
Oh, impressive. That's good. Any more questions for Mark? Mark, can you share your contact information, how people can reach out to you if they need to
yeah.
explore more options with you or want to check out your portal?
Yep. So this is, and please challenge me. Please ask me any questions. You could scan this on the screen right now. This will take you right to me. Or you can screenshot all of this right here. I'm going to put my email address in here as well. Would love to talk to you about tokenization. It's the future. Recognize, we're kind of like Bitcoin 2014 right now. So it's going to take some time to get there. But Larry Fink from BlackRock and Diamond from JP Morgan all say by 2030, this will be what everyone's doing primarily. It won't get all the way there. But in the US at least, they're going to tokenize just about everything of value. Real estate will be part of that. Real estate's got slower turnover, so it's going to take some time. But I believe that you'll see this happen in a big way by 2030.
I think so too, sooner than later, I think. Like I say all the time, it took us 100 years to get here technologically, but now from here to the next level, it's gonna be just blink of an eye. And it's a paradigm shift, the way technology is growing.
I really appreciate you having me.
Thank you so much, Mark, for coming and sharing your portal with us. Really enjoyed the presentation today and got a little bit more insight into blockchain and tokenization. And this is the new world that we're going to be stepping in sooner than later. And it's always a good idea to embrace the new technology, new future. That's the way to growth. And thank you, everybody.